What is going on YouTube? It's your boy Dollar Mike and I'm back at it again with another video. You guys already know what time it is. It's time for another portfolio update for 2023. We are now in the second month of 2023, aka Black History Month, or February of 2023. And yes sir, let's get it. Either way, you guys know the deal. Pretty much I go over my entire portfolio. This is my Robinhood dividend and growth portfolio. So if you're interested in that, simply sit back, relax. I'm gonna jump right into the portfolio. Let's get it. Let's go. I got the Robinhood app right here and ready to go. So let's load the app on up and get right into it. Right here, Robinhood, Face ID, and we are in. Right now, the portfolio is sitting at a whopping $42,958.47. This month, the first month of January, has been such an amazing month for the stock market. My portfolio is up quite a bit, and honestly, the stock market's up quite a bit in general. And this is something that just goes back to what I've been saying for a couple of months now, maybe a year, really longer than that, but I've really honed in on it and really just stuck to my guns as far as what I'm saying here, and that is just be invested. I talk about it on my Instagram. A lot of you guys don't follow me on there. Make sure you do, but just be invested. Nobody knows what's going to happen in the future. Nobody has no idea what could happen tomorrow, next year, the year after that. Crypto by all means could go to the moon. It might all crash. The stock market by all means could go to the moon, but it probably won't happen overnight. But the point is just, I'm just saying, it's just to be invested. And by be invested, I mean simply buy the entire market. Simply just buy into an index. If you don't want to pick individual stocks, simply pick something like ticker symbol VOO, which invests your money into 500 of the top companies in the US right now, or you can go and invest into something else on the stock market, but just a broad market index fund. So when you see days like today, you don't miss days like today. You don't miss opportunities to make 1.9% on your portfolio because you're sitting on the sidelines waiting to possibly get in. By all means, the market could go down tomorrow. I don't know. I'm not really here for the market to go up or down today or tomorrow. I'm here for the long term. In the long term, I'm pretty sure it'll continue to go up. And overall, my money will generally compound on top of each other, or on top of itself, I guess, the more money I put in. Either way, that's all I have to say. I just want to stress that point because it's very important. As you can see right now, we're up about $552 on the day. If we check the past week, we're up about 3.77% or $1,500. The past month, like I said, has been great. We're up about 10%, 10.5%, $4,000 in a month. Most people might make that, from their regular job. Most people might make that from something else, but I'm saying you can make that here in the stock market, and you can make it at your regular job, and you can make it at your side hustle. So why limit yourself? Why not go ahead and start your investing journey today and make $4,000 in a given month or more than that? Because it's an option for you. And mind you, I didn't touch anything as far as my portfolio goes this year. I simply kept what I had in for this year so far. So the year to date, I have not bought anything. All of January, I have not bought a single stock. So this isn't me trying to play the market. This is just me simply waiting and being invested into the market. That's all I'm saying, and I'm going to continue to say it because it's just important, and I think people should just invest in general. Of course, and only invest what you're willing to lose, but we talked about that all on a separate video, so I'm not going to dive too deep into it here. Past 3 months, we're up about $1,800. So a nice little recovery since November, December, I guess you could say. So that's about 4.5%. Year to date will be obviously about the same because it's only been 1 month of the year, and that's about 10.52% or $4,000. 1 year, we're still down about 11%, and then all time since I've had my portfolio, we are up about 7.5% or $3,000 of all time. Mind you, if the market never crashed, we would be sitting somewhere around $51,000 if I sold my investment, I guess you could say, or pretty much if the market stayed the same since November of 2021. The point still stands though. This is insane. I think people should just go ahead and take advantage of something that they don't really have to do much thinking about. Just go ahead and invest into a broad market index fund and call it a day. The average person will be just fine doing that. I simply pick stocks because I find more joy in picking some stocks that might make me a little bit of extra money, but they might also lose me a little bit of extra money as well. So for the average person that doesn't want to do all that extra hassle, pick stocks, all that kind of stuff, just buy a broad market index fund and you'll be good to go pretty much for life. And yeah, that's pretty much it. If we go past that, we can check out my buying power right now. My buying power is about $547. And we scroll down, we can get into the stocks. I do have cryptocurrency on here. You guys already know I simply buy my cryptocurrency on Robinhood and then move it to my private ledger wallet. Make sure all my cryptocurrency is secure because I don't want any of it stored on any public exchange. Robinhood is no different than Coinbase, is no different from FTX as far as I'm concerned when it comes to my cryptocurrency. So I will not store any more cryptocurrency on any public exchanges going forward. I am not running the risk of losing any money in crypto on top of already losing money in crypto by crypto going down. So that's that. You guys know the deal on that. I've talked about that in previous videos as well. Past that, though, we can get to the first stock. The first stock on the list today is Apple, with, of course, me plans to buy more. I typically buy Apple stock when I buy their products. I actually just recently bought a new MacBook for myself. So I actually need to go put some more money in there. Typically, when I buy an Apple product, I'll match it in Apple stock. So that MacBook cost me about about $1,600. So I'm probably going to go ahead and drop $1,600 into Apple stock. Right now, I'm sitting at 24 shares, overall up about 9%, with plans to buy more. I don't have that $1,600 just yet, but it will be matched and it will be put into Apple stock because every time I buy an Apple product, I invest into their stock. Got to make some passive income somehow from it. And of course, they pay a small dividend as well. I think about, 6.6%. So nothing crazy, but you're not here for Apple dividend. You're here for Apple growth. And I think Apple, as far as a company, one of the best companies still to this date, and also one of the companies that didn't take a major hit last year when the whole market was down about 20%. So I'm riding long term for Apple, as I think most people probably are as well. Past Apple, we got ticker symbol MSFT or Microsoft. Microsoft is honestly been really surprising me lately in the sense of how, aggressive they've been when it comes to investing into AI. As you guys may or may not know, the whole Chat GPT thing going on right now. If you guys haven't seen it, definitely just go look it up on Google, or Bing to support Microsoft if you want to. But pretty much go check out the Chat GPT. Microsoft invested, I believe, $10 billion into that. And they're also apparently about to start putting it into Bing search, which I think is kind of crazy, but I'm not mad at it. So if this proves to be, something really great for Microsoft, then I would love to see it. And by all means, if that is the case for AI and Microsoft, then of course, being invested into Microsoft stock is probably a solid investment for the long term. So I'll be buying more Microsoft stock. Right now, I have about 5.8 shares of Microsoft stock, overall up about 16.5%, with plans to buy more. Past Microsoft stock, we got Tesla. You guys know I don't care about the haters. I'm not here for the haters. I'm here for the long term. Elon Musk proved the doubters wrong yet again. Overall, the earnings for Tesla were a little bit above average, so they were okay. It wasn't amazing, but we're dealing with a lot in the world right now still to this day, and Tesla still somehow pulled it off, and I'm not mad at it. Overall, if you look at Tesla over the past month, they're up 63%. Insane. That's insane. Overall, I think I'm still down in my Tesla position, but right now they're sitting at 182 a share. Overall, I have about 17 shares of Tesla, overall down about 3%, with plans to buy more as time goes on. I'm a big Tesla investor, and unless something major changes with Tesla, I don't plan on selling any of my shares, and I also don't plan on not investing into Tesla at all anymore either. But for the time being, I really like Tesla as an investment, and I like Elon. I think he's doing some great things, and I don't think it's anybody else out here that's like him in a lot of ways. So I'm gonna ride out with it. That's all I got to say. Past that, though, ticker symbol DGRO is a dividend and growth ETF. You can get this, or you can get ticker symbol SCHD. They're both solid dividend and growth ETFs. DGRO, I personally like a little bit more because of the stocks that they're exposed to, but overall right now it's sitting at $51.58. If we scroll down, I have 134 shares. All the dividends get reinvested into most, if not all, of my stocks in my portfolio. Overall, I'm up about 3% with them, and I have a weekly buy of about $25 every single week. So that'll pretty much buy me half a share every single week with no plans on stopping anytime soon. Past that, we got ticker symbol XLP. Ticker symbol XLP stands for Consumer Staples Select Sector Spider Fund. This is pretty much ETF that holds a lot of different consumer staples like stocks. I used to invest into these stocks personally, but honestly, I just had too many stocks in the portfolio, too much to look at, and I got tired of it. And honestly, I think this is just a better way of going about it. So sitting at $74 right now, we scroll down, I have 34 shares, overall up about 8%, and I have a weekly buy of $10 every single week for it. And if we go and check their top 10 holdings, you can see some of my favorite holdings that I mentioned on the channel multiple times in the past, like Pepsi, Procter & Gamble, Coke, Coca-Cola, Colgate, Walmart, some top heavy hitters, some big name companies. And overall, these companies are going to be around for a long time. These companies are going to make money for a long time because people consistently buy their products no matter what's going on in the world. And nothing's going to change here. So I'll continuously invest into XLP, of course. Go ahead and get that passive income. Go ahead and be exposed to those companies without me buying the individual stock because, like I said, it just got to be too much. If you want to go ahead and buy them personally, though, by all means, go ahead and do that. And if you're looking for a little bit more of a gain possibly, then you probably find a better gain by buying the individual stock. Of course, you're taking on more risk versus buying the ETF where you take on less risk, but you also get less reward. That's usually how it works. Past XLP, we have ticker symbol JEPI, another little bit of a dividend income driver for the portfolio. This isn't something you hold for years, but by all means, I'm definitely going to collect the JEPI dividend right now. It's sitting at around, I think, 10 or 12% every single month, so I can't complain. Right now, the stock price is at $55 a share. And if we scroll down, we can see I have about 43 shares. Overall, not up that much, but like I said, if you scroll down even further, you can see the dividend is around 12% yield right now. So that means I'm getting essentially a 12% return yearly on the dividend right now as a monthly dividend. So we go and check out the monthly dividend. As you can see, all my dividend history is right here. You can see it right here. Dividend August, September, October, November, December, January, all reinvested back into the underlying asset and all making me a nice little source of passive income. So can't complain there. And definitely will be buying a little bit more JEPI as I grow my portfolio. So I won't invest all my money into JEPI right now. If I was retired, I would, but I'm not. Pretty young. I got a long ways to go. At least for now. We'll see. You'll see how things play out in life. But for the time being, I'm not retired. So overall, I'll probably have JEPI for a little bit of time, at least until the dividend comes back to normal. But I'm going to definitely collect that passive income every single month, around 12%. Can't complain there. So past JEPI, we got ticker symbol O, or Realty Income. This is $67.90 a share right now. We scrolled down. I have about 17 shares, 1738, Fetty Wap. Anyway, I gotta stop. That's staying in there too. Overall up about 11.5%. We're doing one take, by the way. And yeah, they invest into a whole bunch of different commercial real estate. You guys know, you guys have been watching the channel for a while, but they invest in a lot of commercial real estate. So buildings like Dollar Tree, Walmart, Sam's Club, LA Fitness, they own those buildings. And then, of course, those companies pay Realty Income just to use their building space pretty much. So that's pretty much the gist of that. Past that, we got ticker symbol STAG. The same type of deal, but industrial real estate. They own a whole bunch of different warehouses. If you didn't know, you know now. $35, $35.87 a share right now. Overall, I have 57 shares of them with plans to buy just a little bit more, not too much. I do expect them to grow. I'm looking for more of a dividend from them. I'm looking for more dividend growth from Stag Industrial. So I'm hoping to see that throughout 2023 and beyond. We'll see. We'll probably reevaluate this investment towards the end of the year, see if it's really worth it. Because I have another platform where I invest into a lot of real estate off of Robinhood, and that is the platform known as Fundrise. So if you haven't seen that video, it'll be linked right up there. Definitely check that video out. It's great. And you can invest into real estate with no impact to the stock market. So all these real estate stocks that I'm showing you now, I'm just saying that they might be here, they might not. In the long term, we'll see, because I'd rather just put it over there. But like I said, we'll just see. So we're gonna gauge this as the year goes on, see where they're at, see how they're doing, and go about our day. I'm gonna have to definitely check on their financials. Overall, I'm down about 4% with them, but they do pay a nice dividend of about 4% right now. Past that, we're looking for growth with them though. Same thing with this one. Looking for growth, dividend. It's a real estate investment trust. They invest into, or they own a whole bunch of different hospitals and healthcare centers. The price right now is $12.97, which is pretty low from where I bought it at. I bought it around $15. Well, I guess not that low, but bought it around $15. I have about 100 shares, overall down about 15%. Do I plan on buying some more? Maybe just a little bit, but I'm not in any rush to do that right now. They have a high short interest right now. If you guys don't know, that's a short interest is pretty much when a lot of people is betting against a stock. So pretty much a lot of people is betting that this stock will go even further, lower. So as far as the price, instead of it being 13, people are betting that it might go down to $9 or $8 or $2. It's a high short interest on this stock right now. So if anything were to happen, we could see some potential short squeeze that could happen where it's a whole process. Look it up on Google because it would take a little bit to explain it, and I don't want to get it all wrong here. But the point is, I'm holding it for right now. They do pay a nice dividend. I'm not mad at it, but 9% right now about. And yeah, that's pretty much it. But look up short squeeze. It's kind of the same thing that happened with the whole AMC GameStop situation, but the same thing could potentially happen to this stock, is what I'm saying. That's about it. Past that, we have ticker symbol BA or Boeing. Boeing is sitting at 214.68 right now. I have not bought any more Boeing shares since I originally started my portfolio back 3 years ago. And I'm up 114%. Will I buy some more shares? One of these days I will. Just hasn't happened yet. Don't know what's going on. I'll figure it out though. I do want to be invested in Boeing a little bit, obviously a little bit more invested, but it just hasn't happened yet. Past Boeing, got ticker symbol ALLY or Ally Financial, which hasn't been doing that well, and honestly was one of my bigger bets coming out of 2022. Right now, sitting at 33.86 a share right now. Overall, I'm only down a little bit of money, about $3, and I have about 50 shares. So I think over the past month, it's jumped 40%. And I talked about this stock about 3-4 months ago. I was like, I really like Ally. I think it's great. I think it'll stand the test of time. But the problem that I'm afraid of with Ally, it's a high risk, high reward type of situation with Ally. Because the problem is, Ally Financial, if you guys don't know, it's a bank. This bank is actually one of the largest banks in the U.S. for, not in general, but one of the largest banks in the U.S. for auto loans. Right now, car loans are in a weird place because we have high interest rates. So people are still getting cars, cool, still getting it, but they're paying high interest rates. And other people might be defaulting on their loans, basically meaning that they get a car and they really just can't afford it, and some of the banks are still approving these loans. So if that's the case and people start defaulting on their loans, meaning they can't pay their car note or pay their car bill every single month, then that'll be a bad thing for Ally, because Ally finances a lot of people's cars. They actually financed my car when I paid my car off a couple of years ago. I paid Ally, and that's how I paid my car off. I guess they financed my car. That was the bank. So, in that sense, if, the car market does take a weird turn, which is in a very weird state right now. I follow a guy on Twitter, and he talks really good car stuff. He knows, like, a lot of car statistics and stuff like that. So I'll probably toss his ad down here. I follow him. He's really solid as far as, like, just information about the auto industry in general. As far as, like, financially. So I think that's great, and it's a nice little insight that you might want to have if you want to be invested into Ally. But right now, the risk reward position of Ally is paying off for me. Will that do the same thing to you? I have no idea, but I did recommend that people grab it, do more research and grab it if they wanted to, back a couple months ago, and it's doing pretty well. I'm not mad at it. So hopefully, I remember I was down about 20%, and now I'm not. So I'll take it. Past Ally Financial, we have ticker symbol JPM or JP Morgan Chase. JP Morgan Chase is probably is one of the largest banks in the world. Overall, past month is not as good as Ally, but it's still solid, up 3% over the past month. Now, if we scroll down, I have about 12 shares of JP Morgan Chase. Overall, up about 3% as far as my total return. Do I still plan on investing into Chase? Of course. I'm a huge customer of Chase. I have like 4 of their credit cards, their business bank accounts, their business credit cards. I'll probably grab another one of their credit cards. And yeah, I'm a big Chase customer. So to me, it only makes sense to be invested into Chase in general. Past Chase, ExxonMobil, one of the best earnings. I mean, these gas companies are just making money for obvious reasons. We're still paying relatively high gas prices. It's not really come down to what it's been, I would say 2 years ago. But I mean, Exxon is they're just printing money. They're printing money. And I guess you can't really blame them. This is America, the capitalism, mindset. So can't really do anything about it. That's pretty much it. $114 a share right now. We scrolled down. I have about 11 shares, up 136%. Mind you, I sold half of my position mid last year in 2022 when I was up about another $700, and I'm still up about another $700. So it's gone up even further. That's ridiculous. Do I plan on selling right now? No, because my position is so small. I do want to actually add to it, but I'm not buying Exxon at these prices. I just can't do it. I don't see the long-term stability of this. Maybe another year of this, that's about it. But past that, I just can't see Exxon staying well above $100 a share and continuously growing after that. I mean, you can make all the money in the world, but if you're not paying out a bigger dividend or something, I can't see myself investing more money into it. But we scroll down on the dividend. Right now, the dividend yield is about 3%, which isn't bad, but considering all the extra money they're making, they could give us a little extra dividend. It wouldn't hurt. They're not spending that money anywhere. Let's be real. Past that, though, we got ticker symbol KMI or Kinder Morgan sitting at $18.37 a share. If we scroll down on Kinder Morgan, I have about 52 shares. Not currently buying anymore. This is for natural gas. I'm hoping there's a natural gas like push with possibly the next administration of government. So we'll see how things play out. But for the time being, that's all I really got. They do pay a nice dividend of about 6% right now, which is great, and they can afford it, so I'm not mad at it. So I'll just keep what I got. I might put a little bit more money in just to get me over that $1,000 threshold, invested or something like that, or just to build up the portfolio diversity a little bit more. We'll see. I'm not really entirely sure, but I'm not in any rush to buy any more Kinder Morgan right now, if you're wondering. Past that, we got Disney. Disney is sitting right now at $110 a share. Exactly. We scroll down on Disney right now. I have about 11.37 shares, as you can see. And overall, I'm down about 5%. I've been investing into Disney every single month. I simply just put in what I pay in Disney, which is Disney Plus. That's the only thing I really buy from Disney. And yeah, I haven't really done much more than that. I planned on adding some more money to Disney. Never really got around to it. So I'm just holding what I got and consistently investing that $11 every single month. And maybe it'll get me somewhere. Overall, Disney, do I like it? Of course. When I do use Disney Plus and just, I guess, like Disney products, I'm pretty happy with it. I mean, they own everything now as far as media goes for the most part. So it's pretty crazy, but I'm not mad at Disney. With plans to hold and probably buy some more as time goes on. Past Disney, we got ticker symbol LOW or Lowe's. Lowe's or Home Depot, the home improvement stores, they're both great. I like Lowe's a little bit more, sitting at $213.56. Overall, if we scroll down, I'm up about 21% or $200, and I have 5.4 shares. Nothing else much to say about Lowe's. If we scroll down on the dividend, it's about a 1.92% dividend. So nothing crazy. I'm really here for the growth on Lowe's, and you can see I got a little bit of it. And of course, if I had more invested into Lowe's, I would have a lot more gains on it. So no plans to really do anything different with Lowe's right now. Just consistently reinvesting those dividends and going about my day. That's pretty much it for that one. Past Lowe's stock, we have ticker symbol WBA or Walgreens. Another stock that I mentioned a couple of months ago that I'm heavily bullish, I guess you could say, heavily bullish on. Right now it's sitting at $37.01. We scrolled down, I'm down about 8% overall, or $130, and I overall have about 40 shares with plans to potentially get it up to about 75 to 100 shares as time goes on. I'm hoping that it dips around to about $33 a share again, and I'll probably pick up some more then, and that'll be the gist of Walgreens. I've talked about it in a whole separate video, so make sure you check that video out. CVS is great. I just like Walgreens a little bit more. I think they have the growth down. I think we just have to give it some time. Realistically, we just got to give it some time. That's where I'm looking at it right now. So we'll see what happens. Past Walgreens, we got Verizon. Definitely gonna have to give it some time on this one. Verizon at $41.67 a share right now. We scrolled down. I have about 41 shares, and I overall down about 18%. When it comes to Verizon, their 5G push is, of course, great, but 5G, they're just not there yet. They're not there. I think T-Mobile, as far as if we're talking just cell phone companies, besides Verizon doing everything else, just cell phone wise, T-Mobile is probably one of the best investments, or at least has been one of the best investments that you could have made as far as investing into a cell phone company over the past couple of years after they did the whole rebranding and everything with the previous CEO and now the new CEO. Pretty great. Verizon hasn't done that. I don't know. I feel like Verizon is like that extra cocky person, that's how I feel when it comes to Verizon Wireless in general. But Verizon and overall, I do like Verizon. So when it comes to Verizon Wireless, though, questionable. I think they can do some more with it. I think they can make some more money with it. I think there's a lot of stuff going on, and of course, with people spending less money, people might be not defaulting on their phone bills, but it's a possibility that people are just paying less money in general, or just don't have the money to pay for their phone bills right now. So Verizon might be making a little bit less money. And Verizon, I've also noticed, unlike T-Mobile, has a lot of hidden fees when it comes to their Verizon wireless bills, but I've never had it. That's what people have told me. So if you have Verizon wireless, let me know how your phone bill is down in the comment section below. Is it really crazy? Because on T-Mobile, we literally just pay one flat rate. They don't charge you any hidden fees or any extra fees, and that's it. It's very simple. I don't know why every other carrier isn't like this, but hey, I don't know. Let me know down below about Verizon Wireless if you are a customer, though. Because, I mean, they do have great service. I'm not knocking Verizon. I love it. I'm invested into it. Come on now. Past Verizon stock, we have ticker symbol MAIN, or Main Street Capital, sitting at $39.71 a share. Overall, I have 36 shares with plans to buy more. They are a nice little monthly dividend paying stock. Overall, up about 4%. That's cool, but we're really here for the dividends. It's at about a 7% dividend yield, and it's been, very consistent since I've invested into it. We can scroll down and see all the dividend payouts. It's not that much money because obviously I haven't invested that much money into Main Street Capital, but I probably should put a little bit more in there, and that'll be about that when it comes to Main Street Capital. So let me go on over, and the next one is Prospect Capital. Another nice little dividend paying stock, $7.57 a share right now. Overall, I'm up about 55%, or $323. 119 shares, have not bought anymore, have not sold anymore in probably a year now. And I don't really plan to do anything. Just going to collect the passive income, a 9% dividend yield right now, so I can't complain. And that's pretty much it. Past Prospect Capital, we got ticker symbol TGT, or Target. Target is definitely one of those investments that I am building out. I really like Target. I shop there pretty often, and I really have no complaints. I think it'll be fine for the long term. $177 a share right now, and I'm glad I've dollar cost averaged into it because it saved me a lot of money, a lot of losses. The first time I initially invested into Target, I think about, I want to say $50 into the stock. I was planning initially to put about $700 or $750 into the stock initially. Literally about $50. I put my first $50 in. After I put that in, they had earnings. The stock literally tanked. And of course, you never bet on earnings or anything like that. But if you're not paying attention, and you're just investing all willy-nilly, then you might not even know about earnings and stuff like that. But anyway, Target had earnings. The stock tanked from like $200 a share. Let's see if we can pull it up. It was up. I feel like it was up here, like $200 a share. I think earnings was like right around here, $200 a share, all the way down to $140. So I was happy about that because it gave me the opportunity to buy in at Target at a low price and then ride it back on up, which is exactly what I did and exactly what you can see being up 9% versus somebody that might have just put all their money in right here around 217, and now they're just sitting with a loss until it comes back up to around that average price of $200 a share. So it pays to dollar cost average. It pays to ease your way into a stock that you're not entirely sure about, but you definitely want to be invested into, than just putting all your money in at once. And in the long term, you're probably going to be okay either way. But this one, for my sanity, I'm glad I did it this way. So, yeah. Best Target stock, we got Coinbase. Coinbase is up 12% today. Bitcoin has been doing pretty well over the past month, and cryptocurrency in general. So as long as cryptocurrency is doing well, of course, so is Coinbase. It only makes sense. Sitting at $65 a share, I'm still at a heavy loss with Coinbase, and I don't really know what I want to do. I could just sell, down 75%. I could just sell, but realistically, I don't want to sell because I just don't want to take that much of a loss. And also, I really don't want to buy any because my thought process has changed since I initially invested into Coinbase. So now I really just wanted to go back to normal, or I guess not back to normal, back to my average cost, or at least around there, and just sell it for that price and just be out of it completely. So I think that's what I'm going to do. I think I'm just going to hold it and just see what happens. Because I don't want to buy anymore because I don't really want any more Coinbase. Of course, I could technically make more money if it does go back up to $200 a share. Of course I could. But realistically, I'm already invested into cryptocurrency, and I feel like that's enough for me. I mean, obviously, this stock is down 66% on the year. This is no difference than cryptocurrency to me as far as the risk, I guess, assessment of it. So that's the way I'm looking at it, and I see crypto being around longer, potentially, than Coinbase as an exchange could possibly be around. So that's all I'm saying. I don't know if I'm right or I'm wrong. I don't really know. Let me know what you think down in the comment section below. But if I'm already invested into cryptocurrency, I feel like it really isn't any need to buy or have that cryptocurrency exposure on the stock market. So, I was just with the hype last time, or when I initially bought it, and that's about that. Past Coinbase, though, we got ticker symbol AVPT. I'm not explaining this stock anymore. I'm not talking about it at all in 2023. I'm just going to hope for the best and also stick to my guns. I really do believe in this company. I think they can pull it off. If you want to do some research on it, I've talked about it enough. You can do your own research on it. It doesn't matter to me. Overall, they're up 7% today, which is great. They're hovering around this $5 price range, which is annoying because I wanted to go higher. But, overall down about 60% or $1,900, 275 shares. I do plan on buying a little bit more shares as I grow my overall portfolio. So we'll see how that happens. But that's pretty much it. Past that, Allstate, you guys know, is my, well, if you don't know, they're my insurance provider for my car insurance. My thought process was, Mike, you're not getting any, if you don't get any accidents, then, you're just paying for car insurance just to be paying for car insurance, for life. So my thought process was at least invest into some Allstate stock or something. Match what you put in from your car insurance into this, and then maybe you'll get a return. And overall, got 5 shares. I invest literally what I pay in car insurance, and that's pretty much it. Overall, I'm down about 1%, but they do pay a nice dividend of 2.65%, so I'm getting something. Overall, will this portfolio or will this investment stay on my portfolio for the long term? We'll see. Time will tell. But I think insurance as an industry is fine. And if we look over the past 5 years, up 27%, that's not terrible returns. So, of course, you could have caught it around one of those periods where it dropped down to $73. That's crazy. So, yeah, you could have caught it around that time. But the gist still stands. That's my thought process. Let me know what you think. Are you invested into any insurance-like stocks? Let me know down in the comment section below. Past that, though, we got the last one, which is actually the first time I think you guys are actually going to see this on the channel because, yeah, before we didn't do it. So this is the first time it's on the channel. This is ticker symbol VOO, the broad market, I guess, index fund that I've been telling you guys about. Like, you just buy index fund. Just buy index fund. This is the index fund. This is the one you just buy. I talked about it obviously in the videos, and I've already told you to buy this. But if you guys don't know, if you missed my video that I made back in the beginning of January, I said I was going to invest into this every single day for the entire year. So I'm going to invest into this every single day for the entire year. $5 is going to go into VOO, and we're just going to see what happens. Right now, VOO, or Vanguard S&P 500 ETF, is going to invest your money into the top 500 companies in the United States, and that's it. $378 a share right now. Overall, I'm up about 4% since I've been invested into it, and that's literally it. I've been investing $5 every single day. As long as the market open, $5 is going to this stock, and that's it. You can see it right there, and yeah, that's all I got to say. They have a little small dividend yield. Not really worried about that. It's really just like I guess you could say it's a little bit of a challenge, personal test, a little bit of a challenge to me. And I think it'll be nice to go back and look at the end of the year, into 2023, and just see where we are. Maybe it works out, maybe it doesn't work out. But the point is, this is true dollar cost averaging right here. So that's pretty much it, and that is the entire portfolio for February of 2023. Right now, the portfolio is chilling. The market's closed 5 p.m. $42,000. We almost hit 43, or I guess closed at 43, but it went back down before the market closed. So yeah, either way, I'll take 42,000. Not mad at it. And that's pretty much it. I'll catch you guys in the next video. Let me know what you're invested into in 2023 down in the comment section below. And that's pretty much it. I'm out. Take care of yourselves. Stay safe. Stay positive. Stay hydrated. Dollar Mike. Peace.